Well, Laurie Laird is here all the way from London to talk to us about it. Laurie, great to have you this hour. Now, there's a huge merger in the pharmaceutical industry. Tell us more about this.
Jane, this one got everybody by surprise. We've all been digesting those Apple results, that shock revenue warning from Apple, and here we go. Bristol-Myers Squibb sort of snuck this announcement in while our attention was diverted. This is, make no mistake about this, Jane, this is a massive deal. At $74 billion US dollars, this may be the biggest ever deal in the pharmaceutical industry. It's only just been announced, so I haven't had a chance to go through other mega mergers in this industry. But it's part of a trend, and I suspect we may see more of these sorts of deals. The big pharmaceutical companies are less inclined to put money into developing drugs at an early stage. It's just so very expensive, particularly to comply with U.S. regulatory standards and testing standards. So what a lot of these companies are looking to do is buy biotech firms that have already done that early stage research and buy companies that look like they're harvesting quite promising drugs. A lot of the big companies like Bristol-Myers Squibb, GlaxoSmithKline, they have blockbuster drugs that are beginning to come to the end of their patent life, which is roughly 17 years. It can be extended. It varies from country to country, but let's call it at an average 17 years. So they have full rights to a monopoly distribution for those 17 years. They can recoup some of their development costs. After that, generic drug makers can copy those drugs, so the revenue streams, margins fall almost to nothing at that point. A lot of the big companies, the Bristol-Myers Squibbs of this world, the GlaxoSmithKlines of this world, see that a lot of their drugs are going to come off patent, and that's why they're interested in getting more promising drugs in the pipeline. Celgene has a couple of promising treatments in the cancer area. They're looking at gene research, mutating genes, resplicing genes as a cancer treatment. But Celgene, the price tag is a little bit eye-watering because Celgene's main selling drug is also coming off patent over the next couple of years. And if you want to look at what investors think of this deal, Jane, in a funny old way, they're telling us they think it may not go through. Bristol-Myers Squibb is offering a price that's about 51% above the average price of Celgene's shares over the past month. Now, Celgene's shares have only risen by 31% in pre-market trading after this news came out. The fact that investors have not taken the price of Celgene's shares all the way up to the Bristol-Myers Squibb offer price suggests that they don't think this thing is going to go through. Add to that, Bristol-Myers shares are down 13%, so people who already own Bristol-Myers are not particularly happy with this deal.
So, Laurie, is this a part of an ongoing trend?
Absolutely, Jane. And if this deal doesn't go through, I think we'll see another one just like it. As I said, these big drug companies are finding that the development costs for blockbuster drugs are very expensive. They'd like to acquire things at the early stage of development after biotech companies, many of which are owned by venture capital companies, many of which are not held in the public sector, would rather see somebody else do that early stage research and then buy up companies that are harvesting promising drugs.
All right, Laurie Laird, stay with us as I would like to have your thoughts on the next story.